with the proposed launch of the CGRS, the Nigerian Stock Exchange, it will enhance Nigeria's capital market position on a global scale. Do you feel that way as well?
Yeah, it's going to enhance our position. Like I said earlier, we don't have an act that can enforce corporate governance in Nigeria. So what we're supposed to do is to encourage companies to comply or adhere to corporate governance tenets. And if that comes into play and we have a corporate governance rating system, what is going to happen at the end of the day, which the action is looking at really, is that we're going to have a corporate governance index. It means that even if you have a blue chip company and then you now have a company that's on the corporate governance index, it gives it another level of comfort. That means that there's 100% transparency in the company. The level of compliance is high and pure. The management is up to global best standards. In that case, it means that it will separate boys from men. And what that means effectively is that if you know you're a quoted company, for example, you're mentioning Nigerian breweries now and some other stocks, and they're quoted in the corporate governance index, people will have to look at that too, especially foreign investors that are coming into Nigeria. I know there are some good sides of complying with having a good corporate governance arrangement. One of them is that your level of borrowing, if you want to borrow money, the rates will be very, very low. The investors, when they go into any country, the first thing they look at is how the governance structure. If the governance structure is very good, how they comply with the corporate governance requirements is very good. That's the first thing that they tick on the checklist, that this is the company I want to invest in. So if you see one of your peers as a quoted company now on the corporate governance index, the normal thing that you want to do is you want to be amongst that elite set of quoted companies. And the only way you can get to that elite set of quoted companies is to comply. And if you're complying with all those requirements, then you'll be able to take the benefits of being part of that elite class of shares that are going to be listed on the corporate governance.
Now, if you're listed on the corporate governance index, for instance, does that mean that you'll be off the Nigerian Stock Exchange?
No, you're not going to be off.
Still going to be?
Yeah, you're still going to be a quoted company, still going to be on it. There's so many indexes that are coming up on the market. The corporate governance index is just going to be an additional index that people will look at to monitor really what are the companies that are top range when it comes to management, when it comes to board issues, when it comes to compliance, and when it comes to transparency, in fact.
Okay. So looking at this corporate governance now in a unified term, if we have a unified code on the capital market, for instance, for corporate governance, how much of an impact is this going to have on the equities?
Well, we have a corporate governance code in the market, the one that is a SEC corporate governance code in the market. But you see, the code is encompassing. It covers almost all aspects of a capital market. But what we're talking about is listed companies in the capital market. And the major thing that can still happen, like I said, is when people see the benefits of complying and adhering to corporate governance tenets. And what people will do is, and there's an award to also for that corporate governance, I remember, at the stock exchange. Most people want to be in that elite class. So it's more of a carrot and stick. You comply, and you take the benefits. But it's not on the side of maybe enforcement. It's more of you comply, you take the benefit. And most people at that level, like companies like Nestle, in the last 3-4 years, their third quarter result, there are certain rules that govern when your results should come to the market. Some of them have not missed that deadline date. The results come out on time, and people can plan with those results. They can work with them. People are comfortable with the level of audits, the auditors that audit those companies, the management of those companies, the board structure. Who are the directors there? Do they have independent directors? Are the independent directors, are they really independent on those companies? All these are things that people put in place, and they know that this is a stable and very good company.
But again, you've really focused more on blue chips and middle cap stocks. You've not really talked about the small cap stocks and the penny stocks, because we have quite a lot of them who are actually on the Nigerian Stock Exchange, and some of them have actually had issues in terms of corporate governance, and the Nigerian Stock Exchange has had to wield a big stick in terms of setting them right. Yeah,
recently there were some publications from the exchange whereby some companies that had not been adhering to corporate governance and compliance rules were going to be delisted, and they give them enough time to do that. Like I mentioned earlier, there's a particular function that's called designated advisors. Some of our members are said designated advisors. That's for like the medium and the small companies. And what they do is to midwife all these companies, guide them back to line in line, so that they'll be able to toe the line and go towards a growth arrangement. It's still left to the broker company arrangement, relationship. And that depends on the company's board of directors if they actually want to engage an investment advisor that will be guiding them or in an advisory function to put them right in the corporate governance arrangement. A lot of our members are doing that, guiding companies. And don't forget also that this corporate governance arrangement is new, really, relatively. Some people have been into it for the past 15, 20 years or 30 years. We are just into it maybe like 5 to 8 years now. So some of the companies that still fail, are still lagging behind, will be encouraged to come forward and will move forward. By the time this corporate governance index comes up and some companies elevate to that level, what will happen is that the ones that are below will start aspiring also to come back up, and they will engage their members for further information on corporate governance and guidance. And the post-listing requirements and listing requirements are always on the webpage of the exchange, and the guides are there. All you have to do is follow them according to the letter. Make sure that your accounts come in on time. Make sure that you give information, whether good or bad. If there's any material change in your management, you should inform the exchange. If you're going into any form of business, you should inform the exchange and all those things. Those are governance issues that affect the stakeholders, the people that are investors in all those companies.
Yeah, but then you see, there's also been this argument that if you know, for instance, a company has corporate governance issues, they should immediately, delist them from the exchange, not give them the time frame, because the exchange actually gave a grace period, so to speak, for some companies. Some actually met up with all those criteria that were actually demanded of them, but then there were about 9 of them that the exchange had to now give another additional 1 month, in fact, to the end of this month, to ensure that they tidy up themselves before they get delisted. So people are now, thinking that, the time frame is a little too much. You're giving them too much leeway, and this might invariably affect how other equities, in that category perform.
What you should not forget is that corporate governance is also about stakeholder management. And it's part of the stakeholders of these companies I mentioned are the investors. You understand? And then you have to take care of the investors too. If the investors, at the end of the day, the companies are delisted, it affects a lot of people out there. So I think it's wisdom to give a long rope for them to comply before you now wield the stick. That's why I said that what we're using is more like a carrot and stick arrangement. Some of the companies are moribund, really. Some of them have management issues. But at the end of the day, the bottom line is that there are still investors that invested in those companies that by the time they are delisted, their means of getting value back on their investments will not diminish and remain very, very poor. So I think there's a lot of wisdom if you look at every stakeholder, you discover that the only set of stakeholders that are going to lose out are the investors. It should be good that the exchange should protect them too, in case of future listings that other people that might be coming in.
I know you already mentioned it, but let's still talk about it again. The NSE has actually concluded arrangements to launch the corporate governance rating system yes. next month. Now, do you think this is the beginning of a new era in market transparency, and maybe it will probably engender more investor confidence?
It will engender more investor confidence, but this is not the beginning. It started a new era. The new era started. What we're just doing is we're upping the ante to the next level, whereby now you would start fine-tuning and picking out the best out of the best to say that these people have complied 100%, and these people, for whatever you do, if you're investing in them and you look at their book value, you look at their prices, whatever you see is what you get. And if companies are like that, investors from outside, foreign investors, local investors, will be able to go to sleep when they look at the accounts, when they look at the statements, and when they will know that the company is also well run. And the level of risk management, because corporate governance is also about risk management, the level of risk management in those companies would be in a way that investors' monies will be protected and there won't be money loss.
No money loss, no busting of any bubble like we saw in 2008, 2009.
Yeah, no busting of bubble. But it wasn't only about corporate governance.
Well, that was one of the main issues anyway.
Yeah, I know. Yes, one of the main issues, yes.
But thank you so much, Aki, for coming on the program this morning.
You're
it's
welcome,
been an interesting conversation.
You're welcome.
Well, I've been talking with the General Secretary of Association of Stockbroking Houses, Akeredolu-Ale, and we've been looking at corporate governance at the Nigerian capital market. We'll take another quick break on the program, and when we come back, we'll wrap up the show.